Hello, everybody. Welcome to the webinar. We'll get started at this time. My name is Troy. I'm a Senior Account Manager with AvaTrade. Before we get going with the technical analysis, let's do a quick systems check. If you would, just type OK in the chat box. Let me know if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone runs into any problems as we go along, please let me know. Today's a great day to set up for some technical movements. I don't know if any of you have been following the news, but there's some big breaking news that came in with Trump and Donald Trump and Melania Trump both catching coronavirus, testing positive. Not good news, but certainly news that will move the markets and already has and certainly will quite a bit more through the day and the coming days. So major headlines on that. And then also, seems like smaller news now, but it's non-farm payroll today too. The biggest jobs announcement each month comes today, first Friday of each month typically. And so huge numbers coming out of the US in terms of economic numbers. So fundamentally, there's huge news that already is and will continue to cause great technical movements. When we do our technical analysis, we'll be able to see just the power of what fundamental news combined with our technical analysis can do. As we get going, keep in mind, all investments have risk. That includes Forex trading, spread betting, options trading, etc. No one trade is guaranteed to profit. I think we all understand that. But the other side of that is each and every trade has good potential for profit. So that's obviously why we're all here. The important thing is to manage your risk in a way that makes sense, whether you're using stop loss marks, hedge trades, maybe you're using the AvaProtect feature, which is on our AvaTrade Go mobile app, which has been ranked very high, by the way. I know there have been some login issues in the past, but in general, the functionality, the offerings in the AvaTrade Go mobile app, I think are better than any app maybe that's out there. The AvaProtect is really a unique feature for helping with your risk management on gold, silver, all the FX pairings. You can actually, for a small premium cost, protect against all losses during defined time periods. And so it's something maybe we'll take a quick look at and something you might consider checking out as part of your trading plan. Now, keep in mind that what we cover is meant to be educational in nature and is not meant to be financial advisement. Now, what is technical analysis? Very basic. It's looking at the history on the candlestick charts. Usually it's candlestick charts that people are looking at rather than line graphs or bar graphs. But obviously you could look at the historical movements in any format. Most traders are using candlesticks. Now, as we look back at the patterns that we see on the candlestick charts for the historical movements, we can look for price levels that look important. We can look for trends that are identifiable. And in doing that, we can maybe get some advantage as to where we might want to get in and get out of particular trades. And even if it's not perfect, if it improves your win percentage by X amount in the bigger picture, then the technical analysis can make the difference between profiting and losing, because just 5 or 10% improvement in your win percentage can make all the difference in the world, going from losing gradually to winning gradually, or instead of winning gradually, winning even better than that. So this is the idea with technical analysis, whether it's manual methods, drawing our own trend lines and support levels, or using indicators that give you maybe a heads up as to when you might want to think about getting in or out. Keep in mind, the indicators are also looking at the candles. They're doing technical analysis for you, basically. Now, if you have any questions as we go along, if you want to give any input, please do so at any time. Don't hesitate to chime in, request an asset, give a comment, maybe something that you want to share with everybody that you think is important, or something that you think we missed. With that said, let's take a look at what's happening fundamentally real quick, and then we'll get into the technical analysis. So I mentioned AvaTrade Go and AvaProtect. So if you go to our platform listings on our main website, and you go to AvaTrade Go, that's our mobile app that has the AvaProtect feature on it, you'll see the AvaTrade Go mobile app has AvaProtect on many of the assets, which means you can protect against all losses for defined time periods for a small premium cost. Also, you'll notice if you do the take profit or stop loss settings on the AvaTrade Go app, it tells you percentage-wise and number-wise how much you're risking on that move, so that you're fully aware, what am I risking? Also, what's my potential profit if I program a take profit market? Calculates it for you based on your trade size, converts it to your account currency, so that you know before you buy or sell, how much are you risking to that stop loss mark? What's your potential profit to the take profit mark if you're programming one? So you never have to go into a trade guessing if you calculated the exposure right or not, okay? And by the way, our web trader platform, which when you log in from our main website, you should see the web trader platform for most regions in the world now. It has those same features on the web trader platform, just like the AvaTrade Go app. Okay, you still can trade on the MT4 platform, the MT5 platform, and the trades show on both. What you open on one shows on the other, and vice versa. But you have some additional nice upgraded features on the AvaTrade created platforms. So it's something you might check out. So what are the headlines? We already alluded to it as we started the webinar, right? Trump has COVID, and it's not just the president, it's also his wife. The first lady also is diagnosed, and now they're saying, you know, Joe Biden better be tested as well, because they just had a debate, and neither of them were wearing masks during the debate, which is understandable. They needed to talk clearly and be heard well. They were distanced some, but it's a pretty contagious virus. So there's some fears that maybe some others are going to test positive as well within that inner circle. Think of all of the important people in the US government that are close to the president, that maybe when they're in closed quarters are not wearing masks. So maybe many senators, maybe who knows what level people in his staff could potentially have been at risk as well. So there's a lot of fear about this, and you can see the futures are in the red. You can see right away, futures are in the red. All of this green here is from yesterday, okay? That flipped with the news. Everything's in the red in the futures, and we see the volatility index, which is a measure of fear on the markets, is up over 11% now, or right at 11%, well over 10%. So that's a huge level of volatility. Usually that's down, you know, if it's up 2 or 3%, that shows fear, but it's up over 10%, hitting 11%. When the U.S. market opens, you could see some huge movements, breakthroughs on many assets, reversals, etc. So that's why I said there's likely going to be great technical trading today. Pending orders with buy stops and sell stops could work out very well with this type of setup. And we look what's happening with different assets. Gold erases losses as investors weigh impact of Trump's COVID-19. You know, what is the impact? You know, safe havens are strengthening. Gold, the yen, equities are dropping. You see the futures are in the red. So what's the impact if Trump gets sick? Well, who takes over? Would be the vice president, Pence. Well, he's also up there in age. Trump's overweight, not obesely overweight, but he's overweight, which puts him in a higher risk category. He's 70 something years old, 74, something like that, which puts him in a high risk category. So there's a lot of worry of what might happen, even though he's well taken care of. The hope is these therapeutics that he's been bragging about that are doing so well for people do well for him if he needs them. And so, you know, there's a lot of hope that this won't be as big of a deal as some are thinking it could be. But what happens if Trump and Pence end up getting very sick and can't do their duties, the Speaker of the House becomes the decision maker then, and this is Nancy Pelosi, who is a Democrat on the left, who opposes the Supreme Court nomination, opposes the conservative principles that Trump passed with the lower taxes on corporations and all of these things that Trump has accomplished. So there's a lot of fear by investors of what this could mean if both the president and vice president become incapacitated, because then you'd have a liberal Democrat running the country, making decisions, at least temporarily. So there's a lot of fear, and that's what this volatility index is. Investors do not like the idea of Trump's policies being reversed because they were very good for corporations and business growth. So that's why the fear is hitting the market. Now, if we go to oil, what happened to oil? Dropping, right? Why would oil drop? Because anything that could be bad for the economy is bad for oil, right? Bad for oil demand. And so then prices drop, and it responded with a 3% drop pretty quickly. Why would the yen be strengthening? Yen jumps. Every asset that's in the headlines is reacting because of this fundamental news, okay? And then I mentioned we have the economic calendar. Look what's coming up today. On top of all of this, which is like huge, huge news, we've got the biggest announcements of the month coming here in just some hours time. So non-farm payroll numbers, we've got average weekly earnings, average hourly earnings, year over year, month over month, huge, huge numbers coming in that just by themselves can move the market. Imagine that combined with all this fear that's built up because of what's going on with the virus. So huge, huge potential for movement, and that's my point of showing these stories. Huge potential for very big movements today. Okay, so now then we go to the charts. Let's go to my demo account. Let's have a look. You can have your live accounts open. If you understand the information, what we're looking at, you know, the simulations we go through can become real moves for you. What we're looking at here is gold climbing today. Okay, these are, let's go to 1 hour candles. Okay, this was the spike today after the news broke. So go back 1, 2, 3, 4, 5, 6, 7 hours. That's prior to the news breaking. Gold was dropping. The news broke about Trump and his wife catching COVID, and up went gold. Why? Because gold is a safe haven. Now, I was looking at this just a few hours back, and I had a lot of colleagues saying, "Ooh, buy on gold, buy on gold." I said, "No, look at the technicals." And here's the power of technical analysis. For short-term moves anyways, look at the one-day candles when we look at 1 day. You see the support level here. Support, 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 all the way across. These are 1 day candles. Here's the breakthrough on the way down. It took momentum to do that. That's what happens typically when a support level gets broken. You get a further plunge. Now it worked its way back up. Because of the fear today, it hit all the way up to that resistance level, but look at it pull back. It dropped like $13 per ounce once it hit that old support level, which should be resistance now. What could happen later today if those numbers are bad for the non-farm payrolls, if there's more reason for fear, or maybe just when the US market opens, if the fear surges, what could happen to this resistance level? Yes, you might have gotten out on your take profit as it got here. And if you look at 5-minute candles, look at the drop. Once it hit this line, here's the 1 day candle support line that we drew, which is now a resistance line because it's underneath it. The price is underneath it, so it's resistance. Look how it dropped right off that resistance. It was predictable. So when everyone was jumping in saying, okay, it's going up, up, buy, buy, I was looking at the 1 day candle old support, which should be resistance, saying, well, it might pull back temporarily. And there it went, pulled down from 1916 to 1907. So $9 per ounce pullback. Now it's found some support at this old support level over here. Okay. So if we go to, let's say, 30-minute candles, we say, okay, here is the new support right here. Okay, so if you think gold has reason to climb still, you could do a market buy, right? I could say, and this is a nice technical move. Obviously, no guarantee of profit, but we can have limited risk. So if I buy on gold now, okay, I have a little bit of a support level here in the 5-minute candles. Support right here and up. Support, support, testing the support, right? If it breaks the support and comes down here somewhere, then maybe you get out, right? Your take profit could be up here at the first resistance level. So I'm risking underneath that support, let's say to 1904. So $3 per ounce risk. 1904 gets me below that support level, and my take profit, if I go to the first resistance level up here, the first significant one, 1911 maybe. Okay, maybe I'll say 1903 just to be sure if it's going to break the support, it's not a fake breakthrough. So there. So now I've got a 50-50 potential risk, potential profit, an even split. Why am I trusting the support level might hold? Because it already shot up to this height today already. So maybe it tries to go back up. That's a technical strategy you could try to employ. It's a little tricky with gold because since the pandemic has hit, when there's fear in the markets and the USD is strengthening as a currency that people trust during fear, gold is paired against the USD. So it's got a reason to be pulled down as the USD is strengthening. But as a pure technical move, there's a support level here. We can put our risk equal to our potential profit and see if it comes up to the first resistance up here before it breaks the support. And basically going with the fundamental news with this setup. Now in the bigger picture, that's a little scalp move, right? A small move. Let's go back to the 4-hour candles. Here's our major resistance line, right? What kind of pending order can we put up here if gold breaks above this big resistance up here, which is a more major resistance point? If it breaks above this resistance that it tested and didn't break through, I think it'll test it again. If it breaks through, the next resistance level is way up here. Okay, the old support here, support, breakthrough. Okay, so if it breaks above this resistance here, we could be looking at a run to the next resistance level. So you could put a pending order that if it breaks above 1916, let's say to 1918, then what kind of pending order would buy from up here from 1918? What kind of pending order could buy from a higher point? A buy stop, right? You all with me? A buy stop, buys from a higher point. Why might we prepare for a breakthrough? Because when the US market opens, there's a lot of fear. Gold could rise more. And there's huge announcements today, non-farm payroll. So there's the potential for a breakthrough. We don't know if those numbers will be good or bad, but the potential's there for huge movements and breakthroughs. What happened here when this support level here broke? Look at the drop. If there's that kind of momentum today, you could see the same thing happen on the way up. It dropped that quickly. It could go back up that quickly. And in fact, instead of having your take profit at this resistance, you might mirror what happened here. It dropped this whole distance with big news. If it breaks back above this resistance, it could fill that distance just as rapidly. Okay? So what we're looking at then is a buy stop maybe up around 1920, 1921, let's say. So this strategy, a technical strategy, it's a breakthrough strategy, pending order, buy stop buys from a higher point. Yeah, Georgios, for today. Why do we think today that gold could break this resistance right here and reverse this drop. Okay, there was positivity about the economy, about the virus maybe having good therapeutics, about a vaccine coming. Gold dropped, right? Now there's reason for fear. The volatility index, we looked at it. It's above 11% last we looked. Okay, there's reason when the U.S. market opens that the safe havens could re-strengthen. And if they do break this, if gold breaks this resistance, it could rise as fast as this dropped. Not saying it will, but it could. Okay, and on top of it, it's non-farm payroll today. In just a little while, there's going to be huge announcements out of the U.S. If they're worse than expected, wow, could you see a big movement on gold? Okay, or better than expected, you could see a good big movement on gold as well. So I think a buy stop up here around 1921, 1921.50. Okay, if it hits that price, that means it broke the resistance. It could fill this entire gap up to 1950. Okay, so take profit 1950. Stop loss would be if it broke through and activated the buy. If it came back below that support, then you might get out, right? So if you're getting in at 1921 with almost $30 per ounce potential profit, maybe you risk $10, 1/3. So 1911.50 to your stop loss. So a 3-to-1 potential profit to risk setup on this one. Okay, now we're in. If gold breaks through the resistance, it has the potential to fill this space just like it did on the way down with a rapid rise. And if it does, wow, that's a nice profit. 3 times what you're risking, right? What about the opposite? Don't we see a support level here? Right about there. Okay, support, breakthrough, resistance. And then it broke back above, and you see it bounce here. Hit and went up, hit and went up. If this movement comes down and breaks below this level, perhaps it could drop down to the next major support level all the way down around 1850. Okay, so you also could prepare a sell stop because there's huge news coming today, and we don't know for sure what the NFP numbers will be. We know there's a lot of fear on the markets already, so maybe there's more potential for gold to rise than drop. Maybe you only prepare the buy stop. Maybe you're more comfortable with that. If you want to prepare a sell stop down below one of these support levels, you could do that. I see a major support level right here, this one. Okay, you see it hit here and went up. It would take really bad news for gold to get it to break this support. It would have to break below here. So if the price hits 1889, you could see maybe that gold's in a big reversal, and you could have a sell stop prepared down here. Okay, that's a possibility as well. So how would you set that up? You just go pending order. You say sell stop, sells from a lower point. You say if it drops to 1889, then I'm convinced there's a correction on gold. Stop loss would be back above, maybe 1894. And take profit, if it breaks this support here, you could see gold drop to the next support level here easily, 1883. Kind of a short move. Potential profit of $6 per ounce, risk of $5 per ounce. Okay. Just as an example, so that's an idea as well. You could put your entry point below this support. If it breaks below this one, maybe you think it'll drop to the next level down here. You could put a sell stop up here getting in at 1904. Okay. It's just up to you how you'd want to work that. I can move this up, watch. So here's my sell stop. If it hits my stop loss on my buy, then I'm in on a sell. How about that? So now I could say my take profit is down here, just before this support. I kind of like that one better. So I'm in on a market buy. If it goes up, great, I profit. If it breaks this little 5-minute support, then that means it's got some momentum to pull back further. If it hits my stop loss here, then I'm in on a sell to the next support level here. I've got myself backed up on the market buy. Okay, Elroy, I'm glad. Elroy, the NFP is a U.S. announcement, so it affects U.S. assets pretty strongly, but because it's such a global marketplace anymore, you're going to see big movements on the European indices, the European assets. You're going to see big movements on the Nikkei, on Australian assets as well. I just think you'll see stronger movements specifically on US assets. But also global commodities are affected with all of this. Oil, gold, silver, platinum, palladium, etc. Okay? So there will be big opportunities on all. If you're a scalper, you could already be taking profit on gold here. It bounced off the support. Boom, you take your profit. Great. I pocketed that. And why did we trust this little 5-minute candle support that we saw? Well, because there's high fear and we thought it would bounce up before it would break the support. And indeed it did. So we take our small profit, right? If it comes down and breaks this support now, we're in on a sell. If it goes up and breaks the resistance at the top, we're in on a buy. We've got a buy stop ready to go on gold and a sell stop. Why do we expect breakthroughs today? Because fear is through the roof. And if it breaks a support or resistance, you might see a run that keeps going for a while. It's great for technical trading, for technical analysis, for strategies like breakthrough strategies with buy stop and sell stop when you have this kind of news. Okay. All right, so let's take a look then at some other assets. I think we've exhausted ourselves on gold there. Here's oil. Okay, we said it as we opened. Why is oil dropping? It's dropping because there's fear about the economy. Many times when oil drops, gold is going up, and that's what happened today, right? Fear tends to drive down crude oil if it's economic fear. It tends to drive up safe havens. The yen also is strengthening. Okay, so the question is, where might oil stop dropping? Okay, let me get rid of some of these lines I drew. Here we'll go to objects list. Wow, I have a lot of old lines. Let's get rid of them, clean up the chart. Okay, so now we can see here's a support level on oil here. All right, it hit that little support and bounced. I think it's going to try and come down to the next support level here. Okay, this is a more major support level. It's testing this first one. So what kind of pending order could you put down here to buy once it hits the lower support? If it hits the lower support, what kind of pending order would buy? Because understand, there isn't less demand for oil because Trump got sick. There's just a lot of fear. So oil is dropping artificially. It didn't all of a sudden have an oversupply of oil because Trump is sick. So the oil price is dropping as a knee-jerk reaction. At some point, there's a price level where the bulls will come in and buy. And so technically speaking, these support levels are spots where many times you see a big bounce. We see a little bounce off this support. It's not a surprise. Support, support, it hit and went up, hit and went up. So it hit here and bounced up. A buy limit, exactly, Georgios. And if you put a buy limit above this support level, you might get a bigger bounce than you get off this support level. The more support levels it breaks, the next support level it hits, you might get a bigger bounce, okay? At some point, the bulls will kick in. So you could get in at, let's say, 36.3, okay? 36.3 as an example. So this strategy, let's simulate a pending order as a buy limit with oil, 36.3 as an entry point. And obviously you need to do the trade sizes appropriate for your balance, right? Right now I've got, 0.1, that's 100 barrels. That means I'm risking $100 for every dollar it goes the wrong way. Or I'm making $100 for every dollar it goes the right way if I have 100 barrels, right? One lot is 1,000 barrels, so 0.1 is 100. So I'm 100-to-1 ratio for every dollar movement on the price of oil. If I have 100 barrels, I'm making or losing $100. So you take the trade size that makes sense for you. Now 36.3, that's this support level down here, just above it. And my stop loss then could be just below that support, down at 35.8, let's say. 35.8. So I'm only risking half a dollar per barrel. And my take profit could be back up at a major resistance level like up here. Okay, this is an old support right here that it broke. So let's say 38.3. 38.3. So now my potential profit is $2 per barrel, entering at 36.3 just above the support, taking profit at 38.3 just before the next major resistance level if it bounces up. And I'm risking only 50 cents per barrel. So 4 times the potential profit compared to the risk. So there's my setup. I'm ready just above this support for the entry. So if it breaks this support and hits my price, I buy. If it breaks that support, I'm out with a small loss. If it bounces, I can make up to 4 times as much just to this first support level here. Support, breakthrough becomes resistance and a plunge. Okay, so a scalper would get out at that first resistance level. Okay, and this is a scalping strategy, in and out quick. Okay, any questions so far? I know we're kind of moving fast and I don't see a lot of questions or anything. Any questions, comments? Yeah, sure, you could buy off this first support level. Why not? You could. 5-minute candles, it's a very little bounce. I personally think it probably will break this support level. Okay, it did bounce when it hit the support, but that's still a nice strong downtrend. You see the high points are getting lower. The low points are getting lower. That creates a channel that's a strong downtrend for sure right now. So when we go back to the bigger view, 4-hour candles, we can see that's a downtrend. There's a better support level down here. So if it does drop, hey, you get a good entry. If it doesn't drop, you don't lose anything, right? If you wanted to buy now, you could and put your stop loss all the way down. Okay. You know, that's a strategy as well, to put your stop loss below 2 support levels. So you could buy now, right, with a small entry, and then have your stop loss below both support levels at the same spot as your pending order. Stop loss 35.8. I don't like this. This entry point is good, but it's a method you could use. Modify stop loss, same spot as if the lower one opens, same spot loss or stop loss spot, and take profit, same thing up here, maybe around 38.3. Okay, now I'm risking almost what equal potential profit to potential risk. That's a 50-50 setup. So now I'm in the short term. If it drops lower, I get in heavier with my pending buy limit opening. The buy limit will get me in at a better price if the first one's going wrong. So it's a 1-2 setup if you do the market move followed by a pending order that will re-enter at a better price if it goes the wrong way. Okay, so sometimes you say, okay, I think it'll go up. I'm not sure if it'll go up now or maybe drop a little further and go up. So you say, okay, I'll get half of my position in now. And if it drops, I'll get in with a pending order at a better spot. And maybe eventually I still win on both of them anyways. Okay, so that's one way to do it as well. Again, I'm not as bullish on this support level as I would be on the next one. If it drops to the second level down to this support level here, I trust it more than this one. But either one could work. Yeah, you could set up a sell stop too, Matthew. I'm not against that, because look at this. Look at this support level, and the next support level is down here. Okay, support. So the next support, if it breaks through here, you could have a sell stop getting in around 36. and you could take profit around 34.5. So that's $1.50 down before it hits the next support down here on the one-day candles. So in that regard, you'd say sell stop. If it hits the stop loss at 35.8, you might sell with a sell stop that enters at 35.8 as well and takes profit down at that next support level that you see on the one-day candles. So that way you're not picking a direction. You're in if it goes up, you're in if it breaks and goes down. It's a very, very smart question. And yes, you could set up a sell stop just below the support, which would be the stop loss on the buy, right? 35.8, sell stop. Take profit 34.5. Over $1 per barrel to the next one. Amir, the effect on oil prices typically is this with NFP. Bad economic news, oil tends to drop. Good economic news, oil tends to go up. Not always, but that's the general effect of economic news. So certainly you'll see movement on oil related to these numbers as they come out for the non-farm payrolls. Good question. And with this whole infection of the U.S. president and his wife, the sky is the limit for the amount of movement we could see on these global commodities and on the safe havens, and also on the stocks and indices, the equities. Okay, so let's look at the S&P 500. Someone requested that, and then we'll call it quits and let you all get going, hopefully. Go place some trades, put your pending orders, get ready for the breakthroughs and the movements that are likely to come through the day today. So I see a support level here on the S&P 500. I think the S&P 500 might try to push down to this support level. Okay, even though it's already dropped a ton, it looks like the S&P 500 could try to reach this support level. You see here, it didn't quite reach it. So then we go in to see, okay, what's the downtrend look like? It looks like it's still a downtrend. Okay, so at some point you could pick a spot. If you think the markets are going to drop further down, you could pick a spot to sell. Okay, looks like it's trying to come up. Maybe you put a sell limit up at a resistance level here. Here's a resistance level, an old support, breakthrough. That could be resistance here. Okay, and the other spot you could look is up here. If this movement returns to this spot, you could sell again, because likely if it hits this resistance and doesn't pull down, when it hits the next resistance, it's more likely to pull down. So you could have a small risk here to sell with your stop loss above that resistance. If it drops, great. If it breaks through, you get out. And if it comes to the next resistance level, you have another sell limit ready to go. And if it drops, it could be a bigger potential profit. And you know, it's up to each trader. I like to be patient, let for things to settle. So if this climbs to this resistance level, that might be a spot to sell. So maybe I say, and why do I say sell? Because there's fear on the markets right now. The volatility index is up over 10%. So we're thinking fear all the way through. So we can say, okay, let me sell on a small move. Okay, market move, I sell. And I say, if it comes up here, I'll sell again. So then I put a pending order. This is just a 1-2 strategy again, just like we did with oil. You sell limit, that's selling from a higher price. If it gets up to, let's say, 33.30, 33.30, then I'll sell again with my stop loss just above maybe this high point here at 33.42. And then my take profit could be all the way back down here, 33.06. Back down to the low it already hit just a little while ago. So my potential profit is 24 points down, 24 whole number points down, and I'm only risking 12. You see that? Up 12 to my stop loss, down 24 to my take profit. So 2-to-1 potential profit to risk on this pending order up here, if it hits here. And I could even make that ratio better. If I just cheat that up a little bit, now I see I'm closer to the resistance, okay? And I can put this this take profit down just a little. So a little better than 2-to-1 ratio now. Okay, so we see our crude oils trying to climb up a few dollars. Depending on the size of your trade, you could already close it. It took a bounce, just like we thought maybe it might in the short term. I think it'll push down eventually. So maybe I take my small profit and I wait. Now, remember, we have a buy limit. If oil comes back down and breaks that smaller support, we get in at a better price on oil. So we took advantage of a small bounce off the smaller support level with the market move. Hey, it went the right way, took my profit. Why'd I close it early? Because I don't believe in it as much. I believe in the lower support level more. So it bounced, great, took my profit. Now, if it goes down lower to the next support level, I'm in on one I believe in more. Maybe I let that one go longer. Okay. So now this one, just like I said, it's the first resistance. I wasn't sure if it would hold or not. I was less certain. This resistance up here, I'm a little more certain about. Still, we could be wrong, right? But the higher this gets, when there's so much fear on the markets today, the more likely it is to pull down, okay? Again, no guarantee, but it's all about probabilities and potential. So I don't mind risking on the market move if this doesn't work right away. Then if it hits this one, I'm in at a better price at a more major resistance level. And both of my stop losses I could put up here. So my market move, I better put a stop loss, right? 33.42. So I've got two resistance levels this would have to break before I give up on the market move. And my take profit on both of them down here at 33.06 or so. Okay. So using the technical analysis for a 1-2 move, getting in on the first move, just to make sure you don't miss the pullback if it's going to drop back down now, all the while knowing it may pull up higher, and then we'll re-enter at a better price too. And then our stop loss is just above that better re-entry for both of them. And the potential profit is larger than the risk on the second move. The risk is a little larger than the potential profit on the first. In the end, if it triggers the second one and drops, it's a big profit, right? Big profit potential. And why, technically speaking, are we going down instead of up? Why aren't we looking for breakthroughs on the way up rather than what we're doing with simulating sell positions with pending and market moves? Why are we leaning towards selling over buying? Because there's fear on the markets, right? We're letting the fundamental news help us with what direction we might prefer to go. Okay. And so if anyone joined late, what am I talking about? Fear on the market. We're talking about the volatility index right here. It's up nearly 10%. That's a huge number. If it's even up 4%, that's a big rise in volatility. Okay. When volatility is up near 10%, it was up near 11 just a moment ago. Look how red the futures are. There's a lot of fear on the market. So when you get a pullback, the fear dropped from 11% to 9%. Okay, so that's why the markets pulled back up a little. They pulled up. Eventually, it looks like today the fear could pull the markets back down. Again, there's no guarantee, right? But in the end, by putting these things in our favor, going in the direction that the momentum is, and then using your technical analysis to find entry points that are advantageous and exit points that are advantageous, you're not going to be right every time, but you should be able to be right more often by aligning yourself in the direction of the fundamental news with your technical analysis. Okay? Yeah, Christina, you said we sell. Yeah, we sell when there's fear. We sell equities when there's high fear, typically. Okay? Now, I'm the first one to say, and I said it at the start of the webinar, any one trade can lose, right? We all know that. But in the end, to be right more than you're wrong, to profit more than you lose, you got to have an advantage over just random luck. And so that advantage can be combining the fundamental news as we see it today, along with your technical entry points. Okay, and let's just see. We'll let these run, take a look at them in the next webinar, see how they did. You all please think about your entry points, your trade sizes, your risk, your exposure, and go after some nice profits today. Okay? I think you have huge potential for short-term moves on gold, oil, indices, stocks, and also longer-term implications as well. Okay? All right, everybody. Thank you for joining. Like I said, I think it's a good day for trading. The volatility will be very good for technical breakthroughs and movements. The use of pending orders today could really pay off, along with market moves like I'm showing, 1-2 combinations, where you get in now with a small amount, just in case it goes early, and you have a pending order in case it goes to a more perfect entry point. Okay, all the while controlling the risk in a way that makes sense for you. All right, everybody, thank you for joining. Have a good weekend. Be careful carrying any trades, by the way, through the weekend. Could be big gaps from today's close to Monday's open. So if you're making moves today, pulling profit, you may close and take advantage of the profit before the market closes for the weekend, because who knows what kind of news might come in over the weekend, unless they're long-term moves. If you got a long distance to your stop loss and it's a long-term move, then okay, that's different. But if you're scalping and your stop losses are close, you may think about closing off before the weekend to avoid some gapping that could occur on assets. Okay. All right, everybody. Thanks for joining. Bye for now.